Let's start with market structure. Without understanding market structure, it's impossible for you to really have any consistent or sustainable market strategies. But if you understand market structure and how the market moves in terms of whether it is chopping right here, or it's trending, or it's chopping in this moment, or chopping here, without understanding what causes this and how the movement works, it's very difficult for you to become a consistent trader. Markets don't just move in a straight line. Markets have times when people will start selling off. Maybe they have automatic sells that are put in there and automatic sells for or automatic purchases at different times that will change the direction of the market for a short time. That's why it's so important for you to understand the overall structure. So you can have any consistent or sustainable market strategies, you really need to understand this. But if you understand the market structure and how the market moves in terms of whether it's choppy or trending or whatever phase it's in, you'll be able to infer a lot of information from the charts. Markets don't move in a straight line. Please remember that. And we'll be discussing more about that in a couple minutes. Certain terms have been heard before. You've heard of trending up, trending down. We're going to focus today on a phrase called consolidation. You may also know it as chopping or compression. Accumulation areas are consolidation. Distribution areas are consolidation. Now, these are choppy sessions when the price moves sideways. Okay, you become range bound. On the accumulation side, every day the market moves, it goes through levels of consolidation phases. Some are tight consolidations, some are much wider consolidations. Whether it's in an accumulation or distribution, both are consolidations. Now, accumulation is when they're building positions, people are building positions, they're buying more and more at the lower prices until you run out of sellers. And that's when the price starts moving up and you have additional people who are breakout traders who start buying in, and that's when you get the burst to move up to another level. But all you've done is switch from one level of compression to the next level of compression. The market spends a lot more time in compression and consolidation than it does trending. Now, at a point, buyers are going to stop buying and you're going to run out of the sellers, so it's moved up. So then once you're inside the distribution area, that's when all of a sudden sellers start coming in. They start selling. Maybe they had their 20 or 30 ticks they planned on. They start selling and you get chop. And that's where the fight going back and forth is. And we don't know which way it's always going to go and break out. But we've been really fortunate. We've worked hard to create some indicators that will help you make and see which direction it's going to go and how to keep you out of these false breakouts that you'll see right here till you finally get to the real breakout.